Absolutely correct, sir. It will be a very crucial board meeting from market regulator SEBI, and what makes it crucial is this one particular aspect which SEBI plans to consider in today's board meeting, and that is with respect to total expense ratio regulations for mutual funds. What is total expense ratio? It's essentially the cost which a mutual fund company essentially spends with respect to managing any particular scheme of that mutual fund. There are two aspects under this particular regulation which market regulator SEBI will consider. The first one is with respect to the ancillary cost. What market regulator SEBI is saying is that costs like securities, transaction tax, GST on advisory services, all of that should not be kept out of the cap on the total expense ratio, and it should be included. The second important aspect under this thing would be to essentially to have total expense ratio to be considered at a mutual fund level and not individual scheme levels. So essentially, if a mutual fund house has 250-300 schemes, there will be a total expense ratio which will be capped and considered at the mutual fund AMC level itself. The second proposal which is expected to be considered by market regulator SEBI is to shorten the timeline with respect to listing of companies post the closing of IPO. So currently there are about 6 days post the closing of IPO, after which the company lists on exchanges and trading commences. The proposal is to consider shortening this time period to about 3 days. The last one is with respect to disclosure norms from high-risk foreign portfolio investors. Here the regulations are expected to be made more stringent. And what are high-risk FPIs? Essentially any FPI which has more than 50% investment in one group, or more than 25,000 crore investment in the Indian equity markets.